thanks. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The new month for stocks as this rally looks to extend its record-breaking run. We will trade this very busy week ahead with the investment committee. Joining me for the hour, Joe Terranova, Stephanie Link, Anastasia Amoroso, and Brian Belsky. We will check the markets on this first trading day of February, and we are green across the board. And history suggests as we begin this new month, maybe we will have a less volatile one. Joe, according to Oppenheimer, February volatility less common in an uptrend. You could have a tendency to be more volatile in February. However, when you start the month above the 200-day moving average, maybe not so much, as JP Morgan's trading desk also suggests that they remain tactically bullish this market.
Tactically bullish the market, I absolutely agree with, but in terms of volatility lessening, I don't think anyone should expect that. You know, we heard so much early in January about as so goes January goes the market. I think the only thing that we could take away from that is the volatility that we witnessed in January, because I think that volatility is here to stay. You mentioned prior years in which the market was in a bull trend. Maybe you had a weakening in volatility in the month of February. I just remind everyone of what happened in February of 2018. As you were setting out to the Super Bowl, I remember it in Minneapolis, and we had that volatility unwind. 2017, a very calm year, very much like the year we saw in 2025. So I think you have to expect that volatility is going to remain elevated through the remainder of the year, which makes the decisions much more difficult. But I remind everyone, are we that far away from the all-time high that we traced out on Thursday? No, we're not.
Well, that's kind of part of their point, Brian, because you're in this uptrend and you're not that far at all from record highs. That maybe what has tended to be a little bit of a more volatile month won't be as much. And if you look at some of the trades within the market that I think had brought some angst, gold and silver and the dollar and what have you, if you look at gold and silver, they're stabilizing a little bit, but some of the moves that we saw there looked a little ridiculous, like crazy stuff that you don't normally see. You're talking about like 40 years ago when you last saw these kind of moves in silver. So some stabilization maybe there, even though the predictions are still bullish. JP Morgan, their year-end target on gold is 6,300. They're more cautious on silver. What do you make of the market as we enter this new month now?
Well, anytime you have an asset like that, which is 3 or 4 times the average standard deviation of its performance, typically and historically, you're going to have some sort of a pullback, number one. Number two, I think what January showed 2 things. That we are definitely seeing a broadening out with small caps that did what they did in value disciplines, that did what they did in technology underperforming. But I think more importantly, it dovetails to the overall theme we think for 2026, Scott, is that we're transitioning from a momentum, multiple expansion market to more of an earnings-driven market, which historically, if you go back over the last 70 or 80 years, is typically half the return relative to a momentum-driven market / multiple-driven market. Doesn't mean that we're not going to be positive. We're still going to be positive, but not as positive as we've seen.
Steph, okay, so we got this new month. Now, Bitcoin is obviously making some people a little nervous about certain aspects of the market. You see it is rising now, but it was below 75 overnight. Certain things within that complex have not traded well. Coinbase, down 9 straight days. That's you, right? You own that. Longest streak since 24. Robinhood, last I checked, was down sharply today as well. Anything too close to the sun in crypto is obviously getting hit pretty well. This doesn't even take into consideration that we start a week that's pretty critical with some mega caps coming. But before we even get there, how do you see this?
Yeah, I mean, like the precious metals and the memory market, DRAM pricing, and crypto. They all trade kind of the same. It's risk on. And last week, it certainly wasn't risk on. So I think the volatility in those particular segments of the market are going to continue. There's no question about it. But the VIX is only 16. Like, it's not terrible, so I don't worry about the overall market, especially because earnings are coming in better than expected. Earnings are running up 15%, Scott. Revenues are up 7.4%. So that's good. And so here's another interesting thing to me, the data, the economic data. Chicago PMI on Friday at 54. The expectations were 43. Today we got 2 manufacturing series, ISM and PMI. both also in the 50s, and that's really good news. And so that's a big part of it. AI is driving a lot of it. And then the Chase card spending data that comes out every month is running up 5% so far in we get backward-looking January, 5% versus 2.8% in December. So all of this is the reason why the economy is growing above trend, but it's also helping the earnings picture. And I think that's really, at the end of the day, what we care about. Yeah, I don't like to see Coinbase down a million months in a row. It's a very volatile series, but I do want to have participation, a very small participation in cryptocurrencies, because I do think a whole different generation is buying crypto, a lot younger than me, and I think that they would rather own crypto, by the way, than stocks, which is not appropriate in my opinion. But the point being is, it is for real. I don't know the price of Bitcoin. I don't know the price of crypto, but I like the exchanges because all I need is a buyer and a seller.
There's just a lot of things competing for maybe the same dollars, I think is one of the stories around all of these different assets. You know, not to mention in the private markets where you have more access, the prediction markets, which are taking up some oxygen as well. And I don't think, Anastasia, anybody doubts the near-term earnings story, the near-term economic story, and even those who are super bullish, generally speaking, like a Tom Lee says, middle year could get a little squirrely. You could have stocks roll into a bear market before you have a nice pickup and be much higher into the year end, but it's not going to be linear. Yeah. There are just too many variables at play, not to mention that you're going to have, if he's confirmed, Warsh as the new Fed chair. Who knows what the trajectory of all of that is going to end up being?
Well, that's true. And maybe to come back to the volatility point, we are during Trump administration 2.0. So we know historically volatility has been higher during the first administration. So I think there are a lot of factors battling it out. I think, Scott, one of the reasons why maybe people make the case for this being a more volatile year is because it's the midterm elections, and stocks typically have not performed in midterm elections year. But we have to have some context here. We have to be discerning, because if you had a midterm elections year in which the Fed was either staying pat or easing policy, you actually did have an average of 5 or 6% performance versus negative if the Fed was actually hiking rates. So I think we have the Fed on our side, which is positive. And then I do want to circle back to the kind of the extension of Stephanie's point, which is the earnings season. To me, one of the biggest stories for this year is that not only will earnings go up, but the margins are getting better and better. I think that is proof in the pudding that AI is being adopted, and it is driving margins for corporate America. 13.2% is expected to accelerate to 13.9% or 13.6% by the end of the year. So that's a big deal. And then, of course, the economy, to Stephanie's point, it is accelerating, I would say, and I would add the labor market to it. I think the labor market may stabilize, and we see that on Friday.
And productivity.
Productivity has picked up a lot. 2.3% average since the launch of ChatGPT, which is 2x.
Let me just offer how I think.
Please.
My feeling on elevated volatility does not mean the market goes lower. It means you need to position size accordingly. What has gone on in gold and silver is more about engagement and traditionalizing an asset class that previously was not traded by the retail community. Over the last several years, we've done that with cryptocurrency. We've done that with private credit. Commodity futures are the last asset class that is becoming traditionalized by retail. Back in 2020, during the pandemic, people weren't trading commodity futures. They're trading it now,
Joe,
and the engagement is the reason for the extreme volatility.
They traded this for, a minute or two. You know what I'm saying?
Who's they traded it for a minute?
To suggest that all of a sudden there's some new
more
retail engagement.
Absolutely,
in silver.
There
this
is.
was meme-ish. Was there more engagement in AMC and GameStop? Yeah, of course there was. Than traditionally we've seen. But you're acting as if that's some now new trend where, oh, hey, retail finally woke up and realized that silver can be traded, and now they're trading it, which did what it did, and that's just going to be a lasting thing. And I think that's questionable.
On their platform, I'm on Interactive Brokers trading, silver futures trading, gold futures. You're looking and you're actually seeing they're delivering to you the largest moves intraday and what's popping up on a daily basis, SLV, GLD.
Yeah.
So you have people that are chasing that move.
They're chasing the momentum in it like they chase the meme stocks. You're telling me that this is some newfound asset that they're going to all of a sudden, Belsky,
they have not done that. They have not done that in commodity futures up until the last 6 months when silver and gold made the breakout.
Yeah.
And that's the reason why you're seeing the elevated volatility. And you have to learn what commodity futures are. Did we forget what happened in April of 2020 when crude oil went down 300%? They're trading an asset class that, maybe they don't know.
You know what that was? Like what this may be, a moment in time. Did crude oil continue to trade as volatile since that day? No.
No, but commodity futures are way more volatile than stocks are, and they're being introduced to a new asset class. And all I'm saying is you have to understand that. And what the appeal is the momentum.
I think people do understand it, which is why, Steph, you looked at some of these moves, which were outrageous in many respects.
Incredible.
And it brought all of the meme-ish type stuff back. Like, are we really talking about the fundamentals of silver here? No. No.
But that validates my point. That's exactly what I'm saying. This has nothing to do with fundamentals.
Let the speculators leave.
They're not leaving.
And by the way, they left on Friday. That's for darn sure, right? I mean, there's a long ways to go.
You're saying they're not. I say they're gonna.
Totally. Silver's up 250% in the past year, not on fundamentals. And I'll give you that silver, half of it is industrial metal, right? I get that. Copper, same drill. But these moves are outrageous, and it's absolutely speculation. I say let the speculators get out. They'll get hurt. They'll get burned. And then, by the way, corporate America benefits because the pricing comes down, because input costs will come down. We're not there yet, but that's what I'm watching for.
As long as you have a strong market, the engagement is not going away. Today, natural gas is down 22%.
It'll find its way somewhere else. This was the flavor of the moment.
Okay, so
I think there are some fundamentals to some of these trades, though. I agree with Stephanie. Some of the moves as of late are completely out of, not the right size. But at the same time, you do have equity investors that I think figured out that you can stay invested in equities and you can hedge volatility by going long gold. So that's one factor. And the retail exposure, I think, rose to about 3.2%. There's probably scope for it to rise to 5% of the portfolios. And then the other side of that is central banks. Central bank reserve managers cannot trust the U.S. dollar, so they've been diversifying into gold. So
you're talking about two different things, too. Yes, could you make a fundamental case around the move in gold? For certain. Can you make as easy a fundamental case around the moves in silver? Come on, get out of here. No way, B.
No way, man. So I think I'm going to disagree with you on the hedging thing.
Okay, go ahead.
So you're actually adding to your volatility and risk by adding gold here. I think that's the wrong time to do it. If you look back historically, and anytime gold's been 3 standard deviations above long-term average price performance, you look over the next year, it gets dramatically underperforms. That's number one. Number two, let's call it what it is, man. From mid-2022 till Liberation Day, we had a very steady uptrend in gold. Then it started spiking as you heard more about the tariffs, more about central banks buying. Then it became a momentum trade. Second half of the year last year, institutional accounts were massively underweight gold and materials. They played the game. Now we're buying them because they're going up. Now on a near-term basis, people are more comfortable. Oh, I'm going to buy gold because it's up, just like they bought tech because it was going up. But it's not the same asset class. It's not the same fundamental driven. So that's why I think that, we do a lot of Canadian business. I'm sorry for Canada. I'm going to make you mad right now. But at the end of the day, I think the majority of the gold trades are over. It's over. So I think there's more risk in the next 12 months in gold than there is in equities over the next 12 months.
In just a moment, I do want to get to Washington, where we have breaking news from Eamon Javers, who's at the White House. Eamon?
Yeah, Scott, that's right. President Trump posting on social media just a short time ago that he has spoken to Prime Minister Modi of India. He says they came up with a number of agreements in that conversation. The first one is that the president says that India will stop buying Russian oil. That's according to the president's social media post just a short time ago. He's also saying here in this lengthy social media post that he's cut a trade deal with India in which he will bring tariffs down on India from 25 to 18%, and the Indian side will have 0 tariffs and trade barriers against the United States for their part. So we'll wait and see if the Indian government confirms the terms of this deal. But according to the president just a few moments ago, the deal involves India stopping purchases of Russian oil, lowering trade barriers to the United States, and the United States in return lowering those tariffs from 25 to 18% on India.
Eamon, thanks. Eamon Javers. We'll watch the markets, obviously, but it's an interesting report. Thank you for that. Let's get back to what we were discussing earlier with Christina and Kate, which brings up, Brian, if nothing else, take all of the specific numbers and the gigawatts and all of this. money pledged on paper
Yep.
is not necessarily show me the money in practice.
Correct.
The market looks at all of these commitments, if you want to call them that, whether it is, commitments that it thinks the hyperscalers have made, or commitments that it thinks that OpenAI has made, $1.4 trillion or whatever the number is. And we assume that everybody's good for the numbers that are thrown around that have on occasion impacted stock prices in real time. When the event that Christina was referencing unfolded on our program, the $100 billion number that was thrown out, NVIDIA shares went up, I think, a couple of percentage points that day. The fear, if you will, among the greater investing community is that, is everybody good for all the money, whether it's what you're pledging to spend or what you're pledging to commit elsewhere? How do we think about that in the context of where we think we are in the AI trade?
That was an amazing setup.
Thank you.
It was just fantastic.
Thank you.
No, I think the market is transitioning from a talk the talk, walk the walk type situation. We saw that last week, Scott, in terms of the AI spending versus the AI revenue that we're generating from AI. That's number one. Number two, if you go back to last year in the OpenAI reaction, anything that had anything to do with OpenAI, binary decision, let's go buy it. Now, I think the reality is that it's not going to be as clear, cut, and concise in terms of the money generated by OpenAI as everybody thought and acted on last year. That's why we bought Google in April last year and doubled our position, because of the overreaction in Google. And Google, from a fundamental perspective, had much different pieces to that, not all OpenAI. So I think all this is still early going. I'm so happy that Christina dug into that November piece, because that's talking the talk and walking the walk, because it's in writing. And that's what we need to see more of in terms of going forward with respect to exactly how much revenue is going to be driven from that.
I think that we all are trying to get our arms around very large numbers, the kind of numbers that maybe we've never seen before in their volume. X company today investing, so-and-so's raising $100 billion, and these three companies are participating, and it just, the numbers all blur together after some period of time. And so-and-so company is now valued at, more than $750 billion, based on some of the projections that have been made on what the spending could be.
That's right. I think relying on projections, the big macro projections, in something that is yet to be fully proven and something that is really subject to technological disruption, I think that's really flawed thinking. And so that's why when we think about investing in, let's say, data centers, it's not the hope of this contract or that contract, but it's actually a signed contract, negotiated contract that maybe has price escalators, maybe has terms for renewal. So I think it's really important, to your point, Scott, not just to rely on the projections, but to see what the contracted revenues actually are. The other thing I would say back to NVIDIA and OpenAI, I remember when that deal first got announced, I think there was a fair bit of investor scrutiny about the circularity of the deal and the kind of the grandeur of the deal. But maybe the fact that Jensen Huang is being a little bit more cautious, is being a little bit measured on their approach, and perhaps trying to match up, the commitment to the revenue trajectory, maybe that is a good thing. So I think that actually is not a bad outcome.
But that's why monetization is so important, Scott. That's why we're all obsessed about it. I don't have a problem with companies that are going to invest and invest a ton. I have suffered with Meta, for example. They're going to spend $162 or $67 billion this year alone.
They say.
Even
that's the point.
Even if they don't, even if they don't.
The point.
No. Let me get there, because the reason I don't care as much is because they are already seeing monetization. Ad impressions are up 18%, pricing up 6%, and that's been consistent. Time spent up 5%, video time spent up 30%. Those are things that I like to see. It's not all they can do. They've got to do more, and other companies do as well.
Of course they have to. When you're spending the kind of money they need to see a lot more than that one quarter.
My point is, you said these are huge numbers. They are. It's hard to get your head around it. But I would say the only way I can is if I start to see pieces that it's starting to work.
Well, I know, but it has to be more than pieces. I think that's the thing. Joe, and this leads me to Joe, who just did his rebalance, as many of you know, his quarterly rebalance for the Joe T ETF, in which you sold Amazon, Meta, and Apple You want to take me through that? I mean, everybody knows Amazon did nothing last year. But I don't know. It feels like the stock has kind of woken up. It's up 5.5% year to date. Now, you have to, I suppose, make your decisions based on how it ended the prior quarter, and risk missing some newfound momentum to start the current one.
Well, the rules are the rules, and you're looking at momentum over a longer time frame, that being 12 months. And when you take 500 stocks and narrow it down to 250 based on a momentum screen, unfortunately, in the case of Amazon, it falls at 254. Unfortunately, in the case of Meta, it falls at 259. Meta was very difficult to lose that position. We had been in Meta since October of 2023 at $240. That's a difficult one to move to the sidelines and see that go away. So they fall just right outside the threshold from a momentum perspective. Apple actually qualifies from a momentum perspective, but a 3-year sales growth rate at 1.8% just does not get it done. Where the three of them sit in terms of the screening, I'm not that troubled by it because I could see them coming right back in on the next quarterly rebalance.
Yeah, it's just difficult when, as I said, if you look at the last, forget the beginning of January, okay? The last 12 months, Amazon did nothing.
Right.
So by all the metrics that you have to judge these stocks, or the model judges these stocks by, you have no choice but to sell it. You're rules based.
Right.
You could make an argument. Now it depends on what time frame one looks at momentum to try and ascribe that there is newfound momentum, and maybe the earnings this week justify the 5.5% early move. You're kind of stuck.
Maybe it does, and I wouldn't be surprised if in fact that happens. I buy it personally. I'm not. Look, this rebalance that just occurred on Friday, I had, leading up to it, a lot of anticipation for it because I felt like, I said to someone, it was almost like we took out the trash on Friday. There were a lot of names within the portfolio that I could not wait to get rid of. You were, for the last 90 days, asking me about certain stocks and saying, well, we'll see what happens at the end of the quarter. I don't feel that way about any of these names, whether it's Meta, Amazon, Apple. I'm somewhat indifferent. And the beauty of what I think the strategy is that on a quarterly basis, we rebalance and reconstitute. So we could go right back in. Now, if they have a huge move in the interim, okay, so be it. But I'm not that upset by the moves in mega cap. I'm more excited about some of the other moves that we made where I felt it really was time to get rid of these losing positions.
Okay. All right. Got a new buy from Stephanie Link, and it is Synopsys. Why'd you buy this one?
And it was my final trade last week.
All right, so you followed through on your final trade.
Yes, I did. The stock's down 27%. This is a mission-critical software company that they provide software to the semiconductor industry. The more complex semiconductors become, the more they need mission-critical software. That's what these guys do. They have a 41% market share. They also have done a really good job in terms of positioning themselves for growth, meaning they've done divestitures, $600 million or so. They did a really big deal with Ansys. That's going to be $1 billion accretive over the long term. They're delevering the balance sheet. So I like all the things that the management is doing. The stock is trading at 23 times EBITDA, not cheap, but historical average is 27 times. So I'm just taking advantage of the pullback, the overall software pullback, to buy this one. This one, mission critical, is different than just other software companies in my mind.
Okay. So we'll follow that. I mean, most of the time we talk about software, it is not in a good way, as all of you know.
Buying low.
I like
Buy
that.
low and hope it goes higher. We'll follow it. All right, good stuff. So I just want to get to a few other things from the rebalance that we thought, I thought was especially interesting. Amphenol is the only name. When was the ETF established?
November of 2020.
Okay, November 2020. So Amphenol is the only original holding still there.
Correct.
Can we do a 5-year, guys? Better than, I think, what that's going to tell better than this, since it's back to the inception.
And it's a top 25 name if we actually look at the holdings and say, okay, how would you like to rank these from a perspective of momentum, from a perspective of return on equity, debt to equity, and sales growth? Sales growth remarkably strong. This has just been a unbelievable holding for us. And what's great about it, look, we're in at 31. Okay, it's not like
wow.
it's not like we're talking about, oh, it's Palantir, and at one point we're up 900%. This is just a steady company. It's a steady company that delivers on all the important metrics that we're looking at. When you're thinking about quality, do they give you the revenue growth? Yes. What's their relationship to debt? It's very strong. And it continually, on a quarterly basis, delivers, and the performance respects that.
Yeah, well, you crushed that. You sold Netflix and Disney.
Are you surprised by Netflix?
Not really, because what's happened, in the last, if you were judging it by, take the last 3 months out of it, I'd be like, yeah, what are you doing?
Yeah.
But now everybody knows the story. It's kind of a wait and see, so that doesn't surprise me. You sold Disney. They beat on their earnings report propelled by the theme parks. You can take whichever one you want here.
Disney,
just notable because they're popular stocks. We talk about Netflix all the time, and now you no longer have it.
Yeah. So basically, Disney was a 1-quarter trade. We had never ever added Disney to the ETF in the 5 years since inception. Basically a scratch. Didn't score very high on the most recent screen in terms of sales growth, which most of you know, and obviously momentum. Netflix, I'm still maintaining the position. Personally, I'm probably disrespecting the strategy, which generally is right, above myself. When I tend to think of these things, I tend to be wrong. But from a perspective of momentum, Netflix, without question, it has broken down.
Brian, you got a thought on either of these? Netflix or Diz?
Yeah, we haven't changed our opinion on either one of those based on the last 3 months. Disney's.
What was your opinion prior, good or bad?
Good. I mean, Netflix, we own in 4 different portfolios, Scott. I think that's a core name in any communication services sector portfolio for large cap money in the U.S. And we're more inclined to buy more down here because we think operationally there's nothing wrong with the company. I think the company, from a perspective of this Warner Brothers stuff, is in the penalty box a little bit. And I do like the case that they're using cash to buy that asset. Mm-hmm. On Disney, it's a value play. We've been playing the turnaround for a year. We like the theme park business. We like the Disney Plus business.
And you're waiting on the CEO like everybody else.
Like everybody else.
How's that factor in if in any way you think about the future of this company?
Well, let's see what kind of vision they have in terms of where the drivers are with respect to growth going forward. If they're going to continue to throw money at non-performing assets, then we have to worry about that. But Disney, again, we'll see where the new lead. We bought it originally because Bob came back, and then we've stuck with it. We've been stubborn on that, but it's more of a value play.
Okay.
And we want to see what we hear from the new leader.
All right.
We do.
Do you own that? Why don't you own Merck?
I do.
You own both?
Yeah, I own both.
Oh, you do? I'm sorry. I misread my sheet. You do.
We sold Pfizer
Sorry.
and came back to it late last year because of the rebound back into healthcare. Merck's recovery last year, this fourth quarter of the year, completely wiped out the loss. But here's the deal on Merck: 40% return on equity, 14 times earnings, $20 billion in cash. I think what you're going to see in some of these big pharma stocks, Merck and Pfizer, Scott, is they're going to see more acquisitions and more investment into the biotech space.
You warm enough over there?
It's cold in here. It is cold.
It is not cold.
I mean, you walk in here with the kind of tan that you have, and then you're wrapped in a Snuggie under your
This Minnesota
blazer.
kid, the blood has changed,
You all right?
man. The blood has changed.
All right. Just making sure. You got a lot of layers.
Yeah.
We'll do finals next. We wanted to show you shares of DoorDash today, up better than 3% as it was added to the conviction list at Goldman Sachs. It's at the nexus, Goldman says, of blurring the lines between advertising and e-commerce. Joe, you own the name in the Joe T. What do you think?
I would agree with that. In April, we purchased it at 192. It had a significant run up through the fall. Bad quarterly earnings report thereafter. The stock's been under pressure since the middle of February. They're going to report. They have to kind of reverse a little bit of that negative momentum. The fundamental story, though, as you cited, is still very much in place.
Steph, you have Target and Walmart CEOs, the new ones, taking the helm over this past weekend. Target?
Very low expectations.
Maybe.
Very low expectations. Down 27% in the past year. There's a lot to do here, Scott, and they have a capex cycle budget of $5 billion. But they also have a $9 billion buyback program, which is 19% of the float. So it's kind of interesting to me down here, but very low expectations.
Okay, I'll see closing bell, of course, 3 o'clock. Greenhouse, Bryn Talkington, Alex Kanchowitz. We'll have the latest on the NVIDIA OpenAI thing and all that. Michelle Ross, biotech investor. So we're going to get her new names as well, what she's been buying. She'll tell us. All right, Brian Belsky, man who's nice and warm It's like a human sleeping bag over there.
That's right.
What you got? What's your pick?
I'm not going to ask you. I was going to go somewhere with that.
What's your pick?
Raymond James Financial, good Florida-based private wealth.
Defense, this is a multi-year theme. You could do in private markets also.
Brazil, EWZ.
Vulcan Materials added to Joe T.
All right. I'll see you. Dow's good for about 500. And I'll see you on the bell. The exchanges now.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. It is Monday, February 2nd. It's 5:20 p.m. Eastern Time. And here's the markets. I mean, they're all up today. We just saw some clips from the halftime report. We're going to go over a number of stocks that they talked about. We're going to look at the technicals. I'm going to give you guys my insights on those specific stocks. So we'll look at the SPY, the QQQ, the Dow, the Euro stocks, the Russell. And we'll also take a look at Tesla, Apple, Meta, Microsoft, Netflix, as well as these other 13 stocks and ETFs, including the Joe T ETF. We got to take a look at that too. So let's do this. Let's first take a look at the markets. And as you can see, Dow was up 1.05%. NASDAQ was up 0.56% today. S&P 500 was up 0.54%, and the Russell 2000 was up 0.97%. Here are the groups. So how the groups performed today. Consumer defensives, financials, industrials, basic materials, healthcare were the top four. And then you got utilities, energy, real estate were the laggards today, down over 1%. But if you look at the 1 week performance, consumer defensives, communication services, energy, industrials, financials have been the strongest ones. Now, over the weekend, I did do another members only video. If you guys want to catch, get access to that, it's a over 1 hour video. I go over my entire portfolio, and I also shared 27 new stock ideas. In fact, I added a number of those today. So if you want to get access to that, click the join button. It's free to subscribe to the channel, but if you click the join button, there is a fee for those different tiers. You would need to become either Blue Cloud Trader level, and you click the join button, or Blue Cloud Legend level member if you want to get the daily trade updates. All right, so let's go ahead and, one more thing I want to look at is the heat map. And let's zoom out of that for a moment. This is going to show us the individual stocks within the S&P 500. So here you can see, for example, that Microsoft, NVIDIA, right, Oracle, they were down today. However, the majority of the semiconductor stocks were up. Like Micron was up 5.52. AMD was up over 4%. The financial stocks did well, like JP Morgan, Visa, Berkshire was up, Citigroup, Wells Fargo, MasterCard. Google was up 1.88. Amazon was up 1.53. Tesla was down 2%. Meta was down 1.4%. Energy stocks did not do so well today. Utilities did not do well, and real estate as well. However, the industrial stocks recovered, and consumer defensives like Walmart and Costco did quite well. So let's do this. Let's actually start looking at these charts. That's the most important thing. One thing I noticed today in this platform that I use, it's called TC2000, is that occasionally there's a glitch. All right, I'm going to show you this glitch that's happening with the S&P 500, the SPY, where there's a long wick, and that's not really representative of what happened today, because what it's actually showing here is the high was, $696.93, and the low was $69. So we didn't have any flash crashes or anything like that. So I'm not quite sure why that's happening, but tomorrow it should be corrected. It happens every once in a blue moon. So there's the weekly chart. We're still technically above the Tenkan-sen and Kijun-sen, and on both time frames. So the SPY is still in a strong uptrend. The QQQ ETF on the weekly chart, you can see it's still holding up above the moving averages, and the Ichimoku cloud, that's what we're using to help us identify the trend. There's the weekly chart. Here's the daily chart, breaking back above the moving averages, because it did. You can see here it was like resting on them, and it gapped down in the morning, and then we can see that how price moved up throughout the day. So that's a really bullish move. The Dow Jones did something very similar, right? So you can see here it also gapped down slightly in the morning, and then started moving up, breaking back above. Now the thing with all of these is that they still haven't broken through any of these resistance levels, like the 496.34 for the Dow. That still hasn't been taken out. We're still consolidating. If you look at the QQQ ETF, that's still under that 637.01 level, okay, from that prior high there. The SPY I mean, it's hard to see it with this. It really has messed up my chart here, but that too has not broken above the 696.09. It's under that level at 695.41. Let's look at FEZ, which is the Eurostox 50. And once again, it's very normal for price to pull back. And once it comes to a support level, like the 9 period that we're seeing here, the green line on the Ichimoku, for it to bounce. And so that's what's happening. It's up 0.87% today. The looks good on the daily chart and still looks very bullish on the weekly. In fact, I like the Eurostox, you know, probably the most because of the fact that even though we got a shooting star here, we're getting a recovery. We're not breaking down under that $66 level. This might end up being a false flag. It occasionally happens where you get a reversal candle and then things basically just continue to move up. What leads me to also believe that is that we're not really overextended. Okay, we're not really far away from these moving averages. So I don't put as much emphasis on these types of reversal candles when we're close to the moving averages, right? If I see it far away, then it has more significance. And I'll show you an example of that when we look at silver and gold, for example, in a few seconds. Russell 2000 on the weekly chart, still holding up above the 258.20 level. Here it is in the daily chart. Okay, it looks very bullish. Now, this is called a bullish engulfing pattern. It consists of two candles. It's when you have like a small little red candle followed by a larger bullish candle that engulfs the little one. And I'll just show you guys what that looks like on our little cheat sheet that we have here. It's under the double candle patterns. And this is where you'll find it. Where is it? There it is. Bullish engulfing. Okay. So it's this candle pattern. And you can find this on my Twitter page, this particular reference guide. And there's also another um, little screenshot here of the stock patterns cheat sheet. And I believe you can download these. So consider getting those. They're very useful, I think. And try to memorize them if you're trading often, or you just want to learn about Japanese candlesticks. There's more information here too. And to find it on my Twitter page, you do have to go to at Blue Cloud Trader. Okay, that's my handle on x.com. Scroll down, select the highlights tab. You'll see posts, replies. Click on this one here, highlights, and then scroll down a little more, and that's where you'll find it. All right, let's get back to the charts. So Russell 2000, I like. It has not broken back above the Tenkan yet, but it's looking like it most likely will. When you see a bullish pattern like this, the probabilities increase in your favor, that there's a higher probability that the next day price will move up. We'll see if I'm correct about that. How about the VIX? VIX also spiked a little bit in the morning, right? You can see how it actually gapped up, okay, pre-market, and then boom, just dropped. So it dropped 6.31%, stayed under the cloud. And so that's very bullish for the market. We want the volatility to remain low. And at 1634, that's a pretty good number right there. All right, let's keep going. Let's look at the mags, some of the mag sevens, not all of them. Tesla, for example, which is under the Ichimoku cloud, still down 2% today. That's the daily chart. So, one of the rules of this indicator is that you don't want to be adding positions when the Japanese candlestick is under the cloud, under the 9 period, under the 26 period. Okay, when the white line, which is the Chiku span or the lagging line, when that's under price, okay, that's also bearish. You got a lot of negative things happening. And let's look at the future cloud. The future cloud is about to maybe even turn negative. Where if the Senko span A, which is that light colored blue line, crosses under the purple line right there, that's going to be really negative. Okay, so I would stay out of this one for sure. Apple showing a lot of strength today, up 4.06%. And it's always a bullish sign when you see price actually, instead of finding resistance at the cloud, which happens very often, instead it breaks and actually closes within the cloud. It doesn't necessarily mean that this is a buy signal, though. Why? And the reason is actually, you know what else I'm seeing right here, real quick? I'll just show you guys. I'm seeing an inverse head and shoulders pattern. Now, I'll get to that in a second. Here's the head, here's the shoulder, here's the other shoulder. Okay, and there's the neckline that's been broken. And boom, That's again a daily chart. Um, the problem here is that there are a lot of negative things that I'm seeing here still with Apple. For example, the cloud itself is bearish. You got single span A is under the single span B. You've got the Chiku span, the white line. The current price projected 26 periods ago is still under the candle 26 periods ago. That's bearish. You can see here when the white line was above the candles, how the price moved up, and right there where it dropped under, things started to fall apart for this chart on this chart. So yeah, that's what I'm seeing here for Apple on the daily. If you look at the weekly chart, it looks a lot more bullish. Obviously, where this week it looks like we're getting a buy signal on the weekly, which is a great thing. And so if we can get confirmation on the daily, I think that then we'll have a much higher probability trade. Another thing I'm noticing right now here with Apple is that it broke this little trend line right there. Do you see that? So that high, that high. If you draw a trend line across, notice how the candle broke above and closed above it. So that's also quite bullish. And look, I mean, some people like to take a higher risk trade. You certainly could. You could switch it, for example, on a 4 hour, and on a 4 hour, I mean, it's almost there, right? Price broke above the cloud in the 4 hour chart. You've got the Tenkan above Kijun, you got the Chiku span here above price, and so there you can see that inverse head and shoulders pattern even more clearly, right? And the single span A is just about to break above the single span B, and its price is also above the 200-day on the 4 hour. All right, so you can choose what time frame you want to trade. It's all based on the available time that you have too. Just recognize that if you're trading on shorter time frames, you do have to pay a lot closer attention to the stock. Here's Meta on the 4 hour, which looks pretty good, but on the daily chart, it's you can see that it gapped up above that 711 level, that prior high, and now it's getting back under. That's not a good sign that it actually closed under today, under the 711. It's based on that prior high from December 12th. But I haven't been really particularly, you know, excited about Meta here because, as I mentioned before, on the weekly chart, and this is why it's important to look at both time frames, the weekly and the daily. Look at that. The Tenkan is still under the Kijun. That's the faster moving average. The green line is still under the red line, and Chiku span is still under price. So I haven't, personally, I would not be considering this specific stock here. But like I said, on the daily chart, yeah, technically speaking, you've got a future cloud that's bullish just recently, but it's showing us a lot of bearishness here as it's dropping back under 711. So we'll see. Um, you've got Microsoft down 1.61%. So here's an example of where price came up to the 200-day. It also came up to the cloud. And like I said before, usually price tends to stall there. And then what happened with boom, you had that big gap down after hours, and then it's been continuing to drop. So it looks very weak to me. I'd stay out of Microsoft for sure. Here's Netflix, and we've been following Netflix for a little bit because it's been interesting. I've been following this 8211 level. It's very significant. And I'll show you guys why. Because again, as I mentioned pretty much in every video, Netflix found support at that specific level twice before. Back here, okay, that was back on January 17th of 2025, and right here on April 11th, 2025. So price reached that level, bounced, reached that level, bounced, came down. Where's it coming? It's stalling for 3 weeks. This is week 1, 2, and 3. Still holding above 8211. It's at 8276 right now. Let's look at it on a daily chart. There's the daily chart. So you can see even more clearly how it's been stalling there. How about the 4 hour? Even more so, right? So you get it's not looking pretty here because it's under the Tenkan and Kijun still, but it's still holding above that level. So I'd be just watching that like a hawk, 2 hour time frame. So it's interesting how when price comes down to a specific prior level of support, how it reacts to it. And we'll see if it can hold up. Okay, now we're going to get into the stocks we talked about on the show. We won't spend too much time on these. I did highlight the ones at the top, the ones with a little blue flag, as being the strongest out of the bunch. Why? Because the technicals look good on both time frames, the weekly and the daily. Look at that. I like this one quite a bit. Now, um, why do I like it? Because it's obviously showing strength. We can see here it also broke through that trend line today. All right. So there was a downward channel that was building here. And so price on Friday broke above the Tenkan-sen, above the Kijun-sen. So we had a nice little buy signal right there. And then price continued up 2.81%. What else do I like about this chart? If you look closely, we also closed above another level of resistance, this prior high. It's a daily level of 112.90, okay, right there. And it broke above it. Where's it going to most likely find resistance? The next level will be the 120.30. If you go back in time, you'd have to go back to somewhere in 2024, around September of 2024, where it reached those highs. Now, here's an important thing to keep in mind: earnings are tomorrow. I take that back. Earnings were today. I think I wrote this yesterday. When did I write this? Let's delete that. Okay, so earnings. So did they come out with earnings after hours, guys? Let's take a look at this. Include post market. So actually, the earnings are coming out tomorrow, February 3rd, pre-market tomorrow. So Merck is something to watch very closely. You can see that traders are already getting preset. Okay, they're buying this up 1 day in advance. Higher probability because of the action that I'm seeing here that Merck will actually jump tomorrow. No guarantees. We can never guarantee anything in the stock market, and earnings announcements can go either way. But based on the action that I'm seeing here, there are a lot more buyers stepping in with the expectation that Merck is really gonna pop tomorrow. So we'll watch and see. EWZ is the Brazil Index Fund, and that was, I believe, Stephanie Link's final trade at the end of the show. And this one looks good. Here's the weekly chart. It's been moving up. Now we did get a shooting star candle. We're far away from the moving averages. It's a little bit extended at this point, honestly, on the weekly. It's gotten a little far ahead, but on the daily chart, it's had its little pullback. We might see it a little bit of a bounce here. You can see that we've developed what's called a bullish harami. So it consists of these two candles right here, a large red candle followed by a little small candle. Bullish harami looks a little bit like, let's see right here. Do you see that? Large red candle, small, followed by a small bullish candle. So higher probability tomorrow this will go up. VMC, that was Joe T's final trade. Vulcan Materials Company. It's in the buildings materials, basic materials sector. And that one popped up 1.79%. Their next earnings are on February 17th. So here you can see it gapped up and continue to move up throughout the day. Here's the weekly chart. Very bullish still. Chico span above price. Everything looks pretty good overall. And the directional movement index also looks good. You can see that let me zoom in a little bit. See how the positive DI9 is moving up and the negative DI is moving down. That's a bullish situation there. How about Bitcoin? Not so much. Look at Bitcoin. As I mentioned before, we needed to hold up above that 46.68, and if we didn't, we were more likely to come down to the next level of support, which is 42.98, and it looks like that's where we're heading. Okay, there's the candle from today, and you can see, I mean, it's not looking good. Even the directional movement index is saying stay out. Okay, because the red line here is above the green line. The ADX is moving up. That means the momentum. That's the momentum white line that you see right there. If that's moving up and the red line is above the green line, that's very bearish. Okay, you go straight up, you can see how it's led to this decline. And so, yeah, it's not looking like this is turning around anytime soon. Now, again, anytime price comes back down to a support level, and the last support level was right there on Friday, April 11th, 2025, we might get a bounce right there. Okay, but if it breaks through that level, you're looking at another potential drop, and it could be a big one actually, because the next low on the weekly chart, and maybe I should look at the daily chart, but on the weekly chart, it could go down as far as another 55% on the weekly chart. On the daily chart, the next level of support, Let's see. I'll zoom in a little bit so we can find it. Okay. I would say on the daily, and we'll color it red because this is a daily level. There's the low. Oops. There's the low on that candle of 38.17. Okay. And now we can move forward and see where that lies. Move this up a bit. Okay. So that's the next level. How far down is that? That's approximately 15% from where we currently are, right? And the 42.98 level is another 2.5%. So that's what we're looking at, okay? All right. And if you look at this also on the weekly chart, you can see that we have a bearish cloud in the weekly chart. We broke through this support level of 46.68. That's a weekly level, okay? And it's dropping. GLD, gold. How about that shock and awe situation that happened last week? Here we had, this is a weekly chart right here that we're looking at. So this was the week of Friday ending January 30th. And you can see that long wick. What does that represent? A lot of selling. So the high of the day and the close was the bottom of the body of this red candle. All right. And then the next, and then here we are this week, and we're still dropping 4%. So we're seeing a continuation. This is the daily chart. We had the red hammer. We talked about that. It's a single reversal candle pattern. That happened on Thursday, January 29th. So it's not like we didn't get any warnings on the charts. We got the warnings in the charts. I think that we just didn't want to believe the reality of the situation, that this thing has really had this. I mean, we know that it's had a big move, and for good reason. There's a lot of fear and anxiety in the markets, and now gold is starting to drop. So like people are putting their money back into the stock market. Maybe they feel like, okay, the price has gotten a little bit too high at this point. So we might see a little correction. And it's pulled back. I mean, it gapped down. It gapped down some more. And it's continuing to drop. Here's a 4-hour time on the 4-hour on gold. Here's a 2-hour chart. It's under the cloud in the 2-hour. Look at that. How about the 1-hour? Seems to be stabilizing around the 200-day on the 1-hour. 30-minute chart. Okay, so you can see how it's stabilizing at least a little bit today. It reached that low of around 423 and then moved up just 1%. But it's just bearish territory that we're in right now. This is not a good time. No bueno. Okay, not a good time to be jumping in to gold because we don't know how much further this is going to drop. It might come down to that 403.30 level, which is another 6%, and then find a bounce. It could just as easily slice right through it. So that's why it's important to just take a wait and see approach. Here's silver. Let's look at this one by the way, here's the monthly chart on. Let me show you guys something here. This is how the month ended for gold with a long wick, and this is called a shooting star candle. All right. Now I know it's a blue candle, which means it's bullish, right? Overall, because it's like opening price and closing price. But the wick and the top represents a lot of selling that happened throughout the month. And of course, we see that here on the weekly. So if you look at the weekly, that's obviously very bearish. It's a very bearish candle that we had right there. Now, let me show you guys silver, what that looked like. We had a bear on the weekly chart. We had a bearish engulfing. Remember, we talked about the bullish engulfing earlier. This is a bearish engulfing. Small candle followed by a large red body candle that engulfs the little one. And you just look under bearish here, double candle patterns, and this is it right here, the bearish engulfing. Uh, Shooting star, there's a long wick, small body. Greystone doji, long wick, flat body. There's the hanging man, right? Another negative bearish single candle pattern. These are negative when they happen after the price has moved up. They're bullish, the same exact candle is bullish if it happens after a pullback. So it changes the name from hanging man to a hammer, from shooting star, okay, to inverted hammer. Okay, that's a bullish pattern. From gravestone doji It looks like basically a gravestone almost. What you're seeing is a flat body right there, okay, and a long wick at the top, to a dragonfly doji. Okay. Again, it's all about where the positioning of the actual candle is. Is it after prices move down? Okay, that's bearish. So that's really important. And then the bullish spinning top, which is okay, versus the bearish spinning top. Again, it's all dependent on where you find it. All right, let's get back to the charts. So what's happening with silver this week? It seems to be holding up above the Kijun-sen. It was down 3.98%. Let's look at the daily chart. We're still under the moving averages. It seems to be stalling a little bit. If you look at the 30-minute chart, like I said, yeah, it's stalling around these lows here. So I don't know what that. I would not be reading too much into that. Okay, so it's still in negative territory, and it can certainly continue dropping. Here's Coinbase. Yikes on this one. So again, Ichimoku in Japanese, it stands for at a glance. The idea here with this indicator is to quickly, at a glance, assess the health of the stock or ETF. You just throw that indicator on. If you see that price is under the cloud, you skip the stock. You don't maybe consider buying until it starts to show some strength. You do. It doesn't make sense to be buying into weakness or averaging down. A big mistake, in my opinion. There are people that think that's a great strategy. I disagree because you don't know how much further the stock can stay in a decline for many months and sometimes years. All right. Now, this one, you can see the high at $449.70 back in July of 2025. It's not even that long ago. It's dropped 58.05% since then. And can you really, you know, predict where this thing is going to, when it's going to turn around? It's impossible. That's why it doesn't make any sense to be buying stocks when they're dropping. Wait for the change in direction. Get on the right side of the trade. So here's a pullback, for example, price breaking above the Ichimoku cloud right there. And you can see how it led to, from that break up to that level, it moved up 90% in 2.2 months. And again, from that level to that level, if we measure that, that was a 57.7% drop. If you look at a weekly chart, same thing applies here on the weekly, depending on how you trade, you know. So I'd stay out of Coinbase, obviously. Robinhood on the weekly chart, it's been dropping. It had reached a high here of $153 back in October of 2025. It's down 41.33%. It might find some support here at the cloud, but it doesn't look like it because, I mean, the momentum is increasing to the downside. Now, remember what I said earlier about the white line? If it's moving up, that means the momentum is increasing. And it's always a good thing if that is happening and the green line is up above the red line, like right there, and it's moving up and the red line is moving down, like you see right there, and if you go straight up, do you see how that led to a nice move up? When the momentum started to drop, see how that it's almost like a little mountain here. Okay, the momentum starts to come out. If you go straight up, you'll notice how the price dropped briefly. And then it just kept on dropping, and price just moved sideways, okay, because there was no positive momentum. And then what happened right here? Notice how the ADX started moving up, go straight up. Do you see that nice move? Again, the momentum started to slow down here. Okay, it moved sideways a little bit. It started to move up again right there, and price moved up some more. And then once it dropped right there, that was the end. That particular time, it was the end. So these indicators can help. Now, the direction movement index, I've got it at a setting of 9. Okay, it's a little faster than most, but I found it to be, I've back tested it against the traditional setting, and I like the 9. It seems to give me earlier signals, and I like that. I prefer to get an earlier signal versus a later signal. And it doesn't really matter what time frame, whether it's the weekly chart or a daily chart. Okay, it does a pretty good job. Look at this one. I'll give you another example. It also makes it a lot clearer when the momentum comes out, in my opinion. Right? So you can see here it was moving up and there's a sharp drop right there. Again, moving that arrow straight up. Look at the candle there. You see that decline? Now that was a decline of approximately, let's see, 13% in 10 days. Okay. in 9 days, actually. So you can get some insights from these indicators, and it will help keep you on the right side the majority of the time. I mean, it's not nothing is perfect, right? This is just it's almost like a compass, you know. You got Walt Disney, DIS ticker symbol dropping 7.4%. Their earnings came out. Let me see the post market. I'm just kind of curious to see what that looks like. Yeah, nothing really else is happening right now. 5 minute chart. Yeah, it's been just moving sideways. Okay. So I was just kind of curious to see how that was doing. Yeah, Disney's something I would obviously stay out of. And by the way, it didn't make any sense to be adding positions here. Why? Because the technicals were already looking quite negative. They started becoming negative when the Chiku span, well, the Chiku span was actually above right there, but notice how Tenkan-sen was still under Kijun-sen. The faster moving average was under the slower one on Friday. January 30th. So we didn't have any buy signal right there. And on the weekly chart, same situation. The green line was under the red line. So, and the Chica span has been underpriced for multiple weeks. I mean, all the way since that candle right there. So, Joe T, ETF, I mean, it's been going sideways for quite a while here, up 1.04%. Here's a weekly chart, um, daily chart. Yeah, nothing major happening with this ETF. It's been stuck in the consolidation zone. It reminds me of the Granny GRNY ETF by Tom Lee, which also hasn't really done much recently. Let's look at that GRNY. See how it's kind of moving sideways. I mean, these are all mega cap stock, large cap stocks that they're invested in. All right. So we looked at Disney, Joe T. Let's look at TGT. That's Target Corporation. Let's look at the weekly chart first. It's been showing a little bit of strength here, but it's entered the cloud. The Tengen-sen crossed above Kijun-sen, but we're still under that declining 200-day. We still have a bearish cloud. And Chiku-span did break above the candles here in the weekly, but on the daily chart, it does look more bullish, up 3.85%. I still wouldn't jump into this because the weekly is still very bearish, in my opinion. So yeah, ITA is the iShares Dow Jones U.S. Aerospace and Defense Index Fund, and that was one of the final trades as well. And that one has pulled back on the weekly chart, but it's still technically above the Tenkan-sen, Kijun-sen. It's above the cloud. So technically speaking, I like it on the weekly. What does it look like on the daily? It's under the Tenkan-sen currently, but it's finding support of the Kijun-sen. This one is looking like it's trying to set up for a nice little pop, honestly. And because you can see that trend line here, it's a very tight little downward channel. A lot of times you'll see these patterns and it pops, just like it did right here. Okay, or right there. I mean, this one took a little longer, and then it eventually broke up back up above. But we're hitting higher lows so far, higher highs. Okay, so we're in an upward channel still, technically speaking. All right, let's continue. RJF, which is Raymond James Financial in the capital markets. Nothing exciting here. Here's the weekly chart. Okay, price we did get a positive crossover. Tengen-sen above Kijun-sen. Cloud is still looking bullish. Chiku span is above price. What about daily chart? Daily chart is still under Tengen-sen, but it looks like it's setting up for potential, you know, buy signal. The only thing is that we're really close still to that 177. We're about 5 3/4 away from that level of resistance, which goes back to around the September October time frame of 2025. And folks, that's going to do it for this video. Thanks for watching. Thanks for supporting this channel. We're trying, folks, let me tell you something here real quick. We are trying to reach 28,000 subscribers. Without your help, we cannot get there. What I'm asking right now, if you like this video, and only if you like this video, and you plan on coming back, why not take a moment out of your very busy schedule and click with your mouse on the subscribe button. It is free to subscribe. You know what? Go one step further and hit the notification bell if you want to get notifications whenever I pop up a new video. Just go to the notification section and you'll find that video right in there. Thanks again. Have a great rest of the evening or day, depending on where you are, and I'll catch you all in the next one.